This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios in Mumbai. Mumbai with very low visibility and a little foggy and very hot and all those things this morning. It's a Wednesday morning, middle of the week. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, Prashant. Good morning. Nigel, morning. At the onset, I must say that it is extremely horrifying to see those images of what's happening across Gaza with that hospital being bombed overnight as well. 500 people have been killed. And, of course, the implications that it will have on the economy, on not just on the economy, on humanity in general, is going to be extremely far-reaching. So, your heart goes out to all of the families, all of the children, the women who have lost their lives amidst this political battle. I hope there is a ceasefire very soon, but this is truly horrifying to see the way things are panning out.
Well, that's right. You can only pray and hope that the men in charge, a better sense prevails, and for the good of humanity and good of the globe, everything just subsides, come to some kind of an agreement and just call it off, because it's getting worrying. We talk about the Indian markets, moving up, or the global equity markets, but lives are being lost in hundreds on a day-to-day basis. So it pains you, right, to wake up to...
No, absolutely. I mean, it's a helpless feeling, right? I mean, it's terrible, it's tragic, but you just watch it and you just hope that things kind of...
On humanitarian grounds, I think things should be definitely a ceasefire.
So I think the US president is there, and maybe things will de-escalate a little bit after what has happened last night. But, we'll continue to sort of track those developments there. But let's just quickly turn our focus to markets and what you need to know as we begin another trading session. You've got overnight, the big story is the jump in yields. US yields saw a very sharp 13 basis point jump. The 10-year was up at about 4.83, which means that the 10-year is now that's pretty much close to the previous high. So it saw 18 basis point fall last week, and overnight we've had a 13 basis point up move. So big moves, some of these are. Now, yields moving up typically is also an indication of risk on. And, the reason why it perhaps is not risk on is because of what we were talking about earlier, which is geopolitics, right? The fallout of this is extremely uncertain. Hopefully things will quieten. The warring factions will sort of step back and hold the fire, but we don't know. So that's the reason why, although the rise in yields was indication coming off a signal from very strong US data, I think, can you take away and say that the market should be up as well? Perhaps no. So the data was strong. US September retail sales were incredibly strong, not just strong. And that kind of outweighed, the dovish Fed speak. Fed Governor Wallace spoke. He sounded dovish, but... I think the market latched onto the data and never really looked back. Actually, it's not just retail sales. You also had industrial production numbers which came last night from the US, for the US, which were also strong. As I said, it didn't translate to that risk on, and bonds did not translate to equities. Equities were lower to flat. Nasdaq actually was down about 0.25%. The S&P was more flattish. Oil prices, they inched up a little bit. I think they're up a little bit more this morning. They're up about 0.8 last night to about $90.5 a barrel. So this is, of course, the big one for the Indian market as well. Markets will watch two things. One, of course, is the speech from Fed Chair Powell. And I think this is going to be important because commentary has been so exceptionally dovish. And all the Fed speakers over the last 2 weeks have said that because market interest rates are high, we don't need to hike. It'll culminate in when we hear from the chairman of the Fed itself, the chair of the Fed itself, but that's only tomorrow. Now, tying all of this back to levels here, the Nifty yesterday could not, it by the way ended once again above the 20-day, but it could not manage to close above the recent high, which is the level that we've been putting out, 19,843. The high yesterday was 19,849, 19,850. So we almost got to those levels and then kind of turned back down once again, but not very far away, 35 odd points. The 61.8% retracement is the level above it, which is 19,883. That is also pending. So then the resistance are these two levels. The first is 19,843 and then 19,880. Support for the Nifty comes in at the 20-day moving average, which is now just under 19,700, and that should not break now. I mean, it's been ranged. It's a 200-point range. We're bouncing around, but hopefully now we're with the market being at the upper end of the range, perhaps it will be more constructive. Now, the Nifty Bank is unable to cross the 20-day moving average. That is the first resistance, which is 44,534, which is about 150-odd points out from where we closed yesterday. Recent high of 44,711 will be the next level to cross. And this is something we've been putting out for the last couple of days. And for supports, the Bank Nifty should not break the lows of 44,044. And then, of course, the 43,900 zone. These are very near-term levels within 100, 200-odd points. But that's how you need to trade this market because it's day-to-day and there is no real big momentum in the market, either up or down. It's choppy and it's cutting you both ways if you're trying to trade it. The GIFT Nifty will come up on your screen and we'll kind of pick it up from there. 16-odd points, neither here nor there. Sonia.
Absolutely. I think, what is crucial right now is to track what's happening across the globe. Because apart from the grave humanitarian and health crisis that we have to deal with, there are a lot of economic implications as well that this, Gaza conflict is going to have, especially at a time when most global markets are sitting with high inflation, dealing with high inflation. So as we know, things have escalated overnight, and that has had an impact on, asset classes like crude as well. Brent crude prices have surged to above $91 a barrel, almost at $92 a barrel now. So Joe Biden's visit to Israel will be watched very closely. On one hand, of course, Biden will be trying to show support to Israel, but on the other hand, he will also try to prevent any kind of regional conflict. So that balance is going to be crucially watched by the entire globe and not just in markets like India. For our own markets, the Nifty has been holding strong above the 19,800 mark. So amidst all of these cues, all of this negativity, the Nifty has seen a lot of buying interest. Both foreign and domestic investors bought in the cash markets yesterday, albeit the amounts were not too large. In terms of, data points, Bajaj Finance, their earnings were largely in line with estimates. The asset quality was stable. The asset under management growth came in. The AUM growth was about 33%. So decent set of numbers is what Bajaj Finance reported, largely in line with estimates. So the street could take, to that very well. Also, there was no change to their FY24 loan growth guidance of 29 to 31%. And I think that is something that the street will definitely like. So that could perhaps provide support to the market, similar to what we saw from HDFC Bank yesterday. A lot of other heavyweights will be announcing their numbers. There's Bajaj Auto, there's Wipro, Indices, LTI, Mindtree. So we have our hands pretty full. But apart from that, I think for the next 24 to 48 hours, watching the global cues very closely would be prudent. In any case, this market has been doing well. So it's just a matter of perhaps buying time before the next leg up.
Well, that's right, Sonia. Putting all those cues on board, the global cues clearly are looking very, very cautious. And the global markets continue to remain nervous. The broader markets here in India, though, they're unfazed and they're doing quite well. But I just want to put on board there is some caution on low liquidity stocks, and we'll get to that in just a bit. The key for me today is the Nifty Bank. Can it go ahead and conquer, or will it choke at those resistance levels, which I'll get to as well? Now, first up, the Nifty yesterday did quite well. We were up 0.4%, 80 points approximately. But the breadth of the market, even better, particularly the small cap space, was up closer to 0.9%. But out here, I just want to make one point. Yes, the broader markets are looking good, and there are plenty of good quality stocks out there. But be a little bit cautious on low liquidity stocks, because some of these stocks, they're running one direction. Just want to pull up two examples. One is KIOCL. That stock is up more than 200%, just 100% just in the last 6 months or so. And ITI as well is up more than 240%. Just take a look at the float in the market. For KIOCL, it's just 1%. And for ITI, effectively, it's close to around 2.5%, or a little less than, a little more than 2% out there. So the float is very, very low. You can try to give it a fundamental reason. But the key reason that these stocks are going up is because the float is so limited in the market. And just to put up a couple of more examples, Punjab and Sindh Bank and UCO Bank, both of them as well run up big time, 35 to around 70% in the last 6 months. But in the last 1 month, both those two stocks are down more than 10%. So if you're playing these low free float companies, well, you'll have to be ready as well for a drawdown of 10, 15% or thereabouts. And that's precisely what's happened in a couple of these names. The float over there as well, very, very limited, less than 2%, less than 4% available in the market. So just want to put this point on board. Let's get to the FNOQs then. Yes, that's what we're talking about. Last 1 month or so, some of these stocks have seen a bit of a pullback. The FIs, what did they do then? In yesterday's trading session, they covered some shorts, and if you're looking at the Nifty as well as the Nifty Bank, on the Nifty Bank, the open interest was lower. The positioning is still 71% on the short side, though. The Nifty options data is quite interesting because yesterday the Nifty ended up, but if you bought that 19,850 call, you didn't make any money because the premium moved up just a couple of rupees or thereabouts. So that's telling you there is writing being seen at those levels. But since that 19,800 put was getting written, well, the support level comes in at around 19,730. At the start of trade, the premium was 70, so you deduct 70 from around the 19,800 mark. And you have the 20 DMA as well, around 19,700. So that's the support zone. Resistance, the recent high, 19,850, that's been a bit of a resistance zone. But today, the Nifty Bank, well, it's always been important because of the large weight. But today, it's weekly expiry as well. 44,500 call was very, very active in trade yesterday. You have resistance coming in at the 20, the 50, and the 100 DMA. That's between that resistance zone, all those three resistance levels. And the recent low, just a couple of sessions ago, closer to around 40,000 odd. So those are the important levels out there. The GIFT 50 is suggesting a pullback of around 15 points. I think it can be a little deeper on that. But let's see how it goes. For the time being, we're in that range, 19,700 to 19,850, and the Nifty Bank holds the key.
Oh, absolutely. The Nifty Bank holds the key. And what we hear later in the evening from Joe Biden's visit to Israel, remember, it's imperative to halt the regional conflict for several reasons. One, of course, being what's happening with inflation across the globe, with the rise in Brent crude prices and the eventual impact this would have on world GDP as well. So a lot of implications, both economic, humanitarian and health implications going forward will need to be watched out for. But let's kickstart the show on the equities front. First up, Mahesh Nandarkar says the Jefferies economic indicator for August 2023 was down 2.3 percentage points to a 5-month low of 5.5% on festive season shift. He says some consumption-related indicators weaken month-on-month, such as the card spends, GST e-way bills, and domestic demand-linked imports. He says the broader economic indicators which stayed strong include power consumption, construction, credit, trade deficit, property, etc. He adds that the RBI tightening liquidity amidst volatile crude highlights the lingering inflation worries.
Okay, well, let's get you some money market views. On rupee, we have Kunal Sodani of Shinhan Bank, who says that U.S. retail sales and industrial production data initially boosted the dollar index, but the impact was short-lived. U.S. Treasury yields rose sharply, offsetting the impact on the dollar. Oil prices surged once again, moving up. USD INR, for the USD INR, that is, we have 83.1 as support, while 83.3 to a dollar is the immediate resistance, followed by 83.5.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields traded in a range with hardening bias on account of geopolitical tensions, volatile U.S. treasuries and the OMO sale expectation. Better than expected bond auction cutoffs provided some relief to the market at the end of the week. He expects the 10-year benchmark to trade in a range of 7.27 to 7.37% range for the week.
Well, we have a lot of stock-specific action to track today, but we'll get to that in just a bit in our special Top 10 segment. We're looking at Bajaj Finance, Canfin Homes, Tata Elxsi, Hutco, as well as Bajaj Electricals. They are stocks on the back of positive news flow. While on the flip side, if ICICI Prudential, L&T Tech, Syngene, and Sensor Tech as well, they are stocks that are likely to open up in the red. Happiest Minds reported a mixed quarter too.